Hey everyone, it's Casey. Today I'll be explaining the concept of petty cash. Before we get started, let's understand what petty cash is. Petty cash is an amount of money kept on hand by a business available for paying small and minor expenditures. These items include stationery, postage, and coffee for staff. Although there are minor amounts in which writing a check is inconvenient and time-consuming, they are necessary to the operation of a business. The petty cash could be stored in a safe or a jar of money. This is guarded by a petty cash custodian who is responsible for ensuring that petty cash expenses are appropriate and in accordance with policies, keeping all receipts, reconciling the account, replenishing the account, and generally safeguarding the cash. The petty cash operation involves 3 steps. The first step includes establishing the fund. The petty cash fund is established by a business writing a check for the amount of the fund, cashing the check, and placing the cash under the care of a custodian. Let's say a photography company, Golden Touch Productions, establishes a petty cash fund of $250 in the month of March. This entry is done by debiting petty cash and crediting cash. That way assets are increased and decreased to balance the entry. After the fund is established, the cash is used to pay for qualifying expenditures. The second step is to make payments from the fund. This is usually made in one of 2 ways. Cash is either taken directly from the fund, or employees spend their own money and seek reimbursements from the fund. The custodian of the business will hand the amount to the requesting employee or reimburse them, and in return, the custodian must accumulate all receipts. It is important to know that as payments are made from petty cash, no journal entries are made. Journal entries are recorded only when the fund is replenished. The last step is to replenish the fund back to its original balance. At the end of the period, the cash in the fund has decreased, thus it must then be replenished. To do so, the business will write a check for the amount which will return the fund back to its original balance. The business records all expenses using receipts that have been saved. For instance, Golden Touch Productions has incurred $80 of petty cash in postage and supply. The company will need to replenish the same amount by debiting the expenses and crediting the cash used to replenish the fund. At the end of the month, the custodian reconciles the petty cash fund by pulling the receipts and counting the remaining cash in the petty box. If there are no discrepancies, the total receipts received and the cash remaining should equal the starting point of the petty cash fund. However, what if the required replenished amount of receipts don't match up? When there is a discrepancy, this could be possibly due to the incorrect amount of change or improper collection of receipts. Thus, a temporary account, cash over and short, will be created to rectify this issue. It records the difference between the expected cash balance and the actual cash balance in the impressed account. For example, in Golden Touch Productions, the amount required to replenish funds is $4 lower than the receipts, which means it is cash short. The $4 is then added to the cash over and short account as an increased expenses as a debit. Thanks for watching.